Facebook.
Everybody in the house. Everybody in the club getting tipsy.
Hey, Aaron.
What's Aaron, man?
Dude, everybody's here. Aaron's here.
Aaron's
D
here.
Nice is here.
D Nice.
You know it, man.
That's such a great clip.
We're not messing around. Chris and Lee in the afternoon. How you guys like that?
Yeah, we hit the East Coast
How
by
you guys
doing this.
like that? What time is it on the East Coast? About 6? 5:30?
Yeah, 5:36. You just got done with dinner. You're like, hey, I need to learn something about loans. I need to buy a house. That's what I'm thinking
there you go,
about.
Safray.
That's what I'm thinking about. What's up, Safray?
Give her some knuckles.
Hey,
Or him.
Safray. I have a question.
Bella, I bet you do.
Bello 903 says I have a question.
It's the afternoon. I'm ready for bed.
Are we on Facebook? Yep, and
Are
we're
we?
on Instagram,
We're
TikTok,
everywhere.
and YouTube. We're on live on all of them.
Nap
360. Nap 360. What's up, Safray? Nap 360. You work at Nap, or you just
I
like
think that's what that means.
Yeah.
I'm assuming.
yeah? 360, 365 days a year, but there's 365 days. 5 days a year. Do you work somewhere else?
That's vacation.
Dude, that's vacation time.
That's Jesus time.
That's vacation.
All right, guys. So you know the drill. Ask questions about your real estate. Ask questions about your mortgages. Ask questions about DSCRs. Whatever you want.
We're great to see you. We're glad to see you here.
I'm waiting for
So,
Bella.
yeah, we're starting to get the people coming in. By the way, we're going to teach you how to get a house in 2024. We're going to tell you whether you should be buying a primary residence, whether you buy a second home, or an investment property. We're going to tell you the differences. We're also going to tell you what New American Funding rates are quoting right now. Pull them up for me.
Okay, before we get too far, guys,
Okay.
you guys know that up top, if you don't want to talk to us, you can apply on the link.
Yep.
Just click the link, stand.store. My phone number is right here, so you can just screenshot this and send us a text message. So if you really want to get started, do one of those two things. But Lee said let's pull up some
Let's
rates.
pull up some rates. New American Funding puts the rates out. You can see the rates by going to our links, going to Cool Stuff. And when you go to Cool Stuff, you go straight to the rates for today. And those rates you would see right now are 15-year, 5.75, 5.75. You would see a 30-year FHA, 5.875, 30-year VA, 5.875, and conventional, 6.25. What do we got here?
All right, let's start, guys. We got a whole lot of questions rolling in, so let's
Yeah,
focus.
dude, we got a lot of people on Instagram, ton of people on TikTok, ton of people on YouTube, and on Facebook. We appreciate all of you guys. We're trying to help you get a house in 2024. Cool.
Okay, Jonathan, buying a home to rent using DSCR loan. What should be the next step? Refinance or HELOC?
We asked that. We answered that one earlier today.
Yeah.
So that's a good question. If you, by the way,
To buy a second rental.
if you're buying DSCR, the property qualifies, not necessarily the borrower qualifying. So the property has to debt service and then some, and then you have to put enough money down. So DSCR is for the property to qualify. Now, if you want to keep doing that, you can, but you need 20% down for every single one of them. And if you're trying to get out of that situation because the DSCR rates are not as good as your Fannie Mae or Freddie Mac, then you need to actually have your FICO, and it has to go in your name in order to do that.
Bella, can someone change a deed to joint tenancy to tenants in common without telling the other owner?
Legally?
I don't think so.
No, I don't think so.
You need
That's
two
a
signatures on that.
Yeah, that's a title issue, and you can't you can add somebody, ironically, without telling them, but you can't take them off because you need their signature to take them off.
Yeah.
You can add anybody, but you create a whole legal issue if you do that. So be very careful. We help you with the loan. We are not title experts. We're not lawyers. We're not any of those things.
Not the
But
cops
we
either.
We're not the cops either. Yeah. She said, where are you? He's right there. I'm right here. We're in Riverside, California, but we do all 50 states. 50 states, all 50. All 50 states.
Cynthia, I'm praying with you.
What are we praying
Jesus,
for?
get us this loan.
What are we praying
Cynthia said, just applied for a loan, praying I get approved.
All right, cool. Did you apply with us, Cynthia? Did she?
Dear little baby,
You
I'm
remember
going to pray for her regardless.
All right, cool.
Dear
want
little
you to
baby
help
Jesus, let Cynthia get a house.
Cynthia, your loan officer counts a lot. Because there's a simple loans. And by the way, if you have a perfect simple loan, perfect, like you have 800 FICO score,
Phew.
great income,
She's in good hands, bro.
unbelievable
She's
background.
in good hands.
Yeah, unbelievable background. Rocket's not a bad situation. I kind of like Rocket. Yeah, but if you have one hiccup, like one late, or you have overtime, or you have been divorced, or you have different jobs, you're going to have trouble. So call us. We'll help you every step of the way.
Mike sold Texas. I don't know much about the DSCR. Can you educate me for my clients?
Let's do it. You tell.
It sounds like you're an agent, Mike, and if you are, you need to reach out to us because we need a lot of help in Texas, man. That's a big state with a lot of ground to cover.
We closed one yesterday.
Agents.
We closed one yesterday in Texas, and we're opening another one today.
We need strong agents out there, man. So text us. There's a number. Text us who you are and education on the DSCR. Here's what it is. It's a non-income loan. So you're not qualifying with your income. You're qualifying with the rents, the potential rents that the property has. Now, for a great client, minimum of 15% down. It can go as high as 20% down. The house needs to debt service. That's the biggest deal. So whatever the projected rents is for that property, if you get a rent roll back from an appraiser showing that it covers the mortgage or it has a surplus, meaning you're cash flowing, then you can actually approve for that loan. It's literally that easy. 680 or better credit score, minimum 15% down. If you have that criteria, you're golden. Finding the property is the hardest part.
Yeah, and the 15% down is a one-off. It's usually 20%, but there is a program of 15%.
All right. So Coors Light 24. Is it bull to pull out? Is it bad to pull out from your 401k for a down payment?
So Coors Light, let me give you a concept. Here's a concept, okay? Your 401k, you're investing in stocks, hoping it will go up for the future in your retirement. Your home, if you're doing as an investment, you're investing it in your future, hoping it will go up for your retirement. So you transfer the money that you were investing in stocks to the money that you're investing in real estate, and as long as you do it responsibly, it's a sound decision. Check with your financial planner because we are not financial planners. However, from a mortgage perspective, we can do it. We do it all the time. Most 401ks have something called TOW, Terms of Withdrawal. And then once we know what the terms of withdrawal, we can tell you how much you can pull out. Because sometimes we'll see somebody that says $100,000 in their 401k, but not vested, which means they can't pull anything out. They're not vested till they've been there 5 years in this situation. So once they've been there 5 years and they're vested, then they can pull out. Now you have two different things to deal with. One is how much can you pull out without penalty? Because the IRS has a rule, says how much you can pull out. And then terms of withdrawal, how much you can pull out through your terms on your 401k. So both of those trigger in, but we factor it all in when we qualify you for a loan.
Eric, on automatic, systematic.
Oh, yeah, that's good, yeah.
Hey, y'all. Bella transferred from themselves to themselves with the purpose of breaking the joint tenancy. So that's the one who wanted to change title.
Yeah, that sounds... Yeah, I would get some advice on that, and probably not from a loan officer. You probably want to deal with either an attorney or a title professional because you have a joint title issue, and plus your lender might have an issue with that. Maybe, maybe not. Mm-hmm. Because if they're both on the loan, yeah, it doesn't matter how they. Yeah, because when we get questions when we're doing the loan application, how do you want to vest? And you can vest JTWROS, which joint tenancy with rights of survivorship, or tenants in common, which means your estate goes down per stirpes, which means by the bloodline. It doesn't not automatically go over to the other person on the loan. So there's different ways to vest. Changing post, I don't know if that's an issue. Check with your title and probably your lender, whoever has your loan.
Gotta tell Navy Mom hi because she gets
What's
mad.
Up, Navy Mom?
Great
to see you. She's mad. Don't want Navy Mom mad.
All right,
That's
Tara Bricks.
Damn sure.
Tara Bricks says, "Are you related?" I don't know if she means us because we're brown. Is that what you're saying, Tara Bricks?
Dude, you can't say that, Tara Bricks.
It's a color.
Not in this environment. Not in this
but
society.
We are.
No, we're brown. Yeah, we're brown, right?
And then she said, "Can you match or beat my deal from my credit union?"
Oh, maybe. I don't know. You know how we would know? Locked LE. You have to tell them, I need a locked LE. By the way, you tell any seasoned loan officer you need a locked LE, they know exactly what you're doing. They know you're going to shop because you'll say, hey, can I get a loan estimate? Oh, yeah, can you make sure it's locked? Nobody knows to ask that unless another loan officer told you to ask for a locked LE.
We know.
Cool.
We know. Leslie, how about conventional in Arizona?
Oh, yeah, we can do conventionals in Arizona. We got some realtors that work Arizona. I can think of two top producers off the top of my head, close a lot of loans in Arizona. We love closing loans in Arizona.
I like Phoenix. Phoenix is okay.
Phoenix is badass. The Phoenician, oh, such a great hotel.
Happy Genie. What are those green little guys? Tell me what that is, Happy Genie.
They're goblins, I think.
So, is there a way I can cash out some equity out of my house but not refinance my current loan? Randy CZ4MM.
So you can do a HELOC. You can do a second. Anything else?
Yes.
What?
Yes. Non-QM.
Non-QM. Yeah, non-QM. Yeah, and there's these weird scam companies. I don't know if they're scams. I have to be careful.
Yeah.
But they're coming up saying, hey, would you just like to share your equity with us and we'll give you some money?
And you don't need to make us a payment either.
You don't have to make any payments either. Yeah, I'm going to foreclose on you later, and I'm going to ridiculously charge you, but I'll give you a little bit of money right now. Be careful with those. Go with somebody who's regulated. There's regulations in place.
So, yes, Randy, that's what we do all the time. Often we do HELOCs or seconds because you have a good rate on your first.
Yep.
You don't want to mess with that. So, good thing to do. Call us, text us. We'll get you started. Xavier. I was going to say Javier because I get confused. Is it
Dude,
Javier?
there's a lot of
Is it
questions
Xavier?
coming in. There's a lot of questions coming in.
Can you explain the underwriting process?
There's some questions there,
yeah,
too.
she said, why you never say hi?
Oh, you're going to say, I say hi.
Can you explain the underwriting process?
Sure. Well, I'll explain the whole loan process to you.
Oh, God.
Oh, God. Here we go. You need to kick back, grab a beer. If you're on the East Coast, if you're on the West Coast, don't grab a beer because it's still work time.
Wake me when you're done.
Yeah. So, really quickly, LO starts the loan. Loan officer starts the loan, gives you the education, takes all your information, pulls your credit, creates a file. Then he transfers you off and you say, hey, listen, we are in escrow. You enter escrow. At that point, we transfer you off to a processor. The processor tightens up all the things that the loan officer did and sends you to an underwriter. The underwriter then goes through and says, let me double check this in a way that those guys can't. Like with a 4506T, which is the IRS matching the transcripts that you gave us the 1040s for. And then the underwriter comes back and says, hey, I love the file you built. Approved. And then they say, approved. We are clear to close. Fund it. Here's your keys. Whole process.
Boom. That easy, Javier. All you got to do is call Xavier.
Yep.
It's Xavier.
Yep.
Jason Thompson. I'm a realtor in AZ.
We appreciate you, Jason.
Jason,
If you got any questions, if you got any questions, ask.
All of you agents, please send us a text message wherever you're at. We get buyers all across the nation. We need to know you guys too. And if you're badass, you're going to get business. Text this number. Tell me where you're at, city and state.
And if you're a loan officer, you don't need to lurk in the background. Come on board. We talk to you.
Say hello.
We say hello. If you know more, we want to hear it. Please teach us. If you don't, sit down, son. You might learn something.
Boom. Okay, 3 legs to a loan, guys. Here it is.
You tell them.
It's the Chris and Lee 1, 2, 3.
1, 2, 3.
Income, assets, credit. If you got a problem with income, do we have a solution?
Solution.
If you have a problem with assets, do we have a solution?
Solution.
If you have a problem with credit, do we have a solution?
Solution.
So here's what they are. If you want to increase your income, Lee and I started a side hustle. It actually makes money. Well, you can copy us, and we'll even teach you if you need it. Okay? Step 1. That's the
Hold on, I have to stop.
Okay.
Have you ever just had your business partner walk in and drop a check on your desk that you didn't even know was coming?
Yes.
Is that great?
This
morning,
matter
yeah.
of fact.
Yeah, this morning.
So what he's talking
From a
about
side hustle, yeah.
is we have side hustle going on, and he said, "Hey, Chris, check this out. Just dropped a check on my desk. I had to figure it out because I didn't know who the person who wrote it and where the bank was. It was very confusing, but I'm like, oh, it's our affiliate marketing. Thanks.
Yeah.
So it got deposited.
Yep.
So that's the income part. So that happened to us this morning. Thank you for reminding me. 2 is the assets. So down payment. Often we're like, hey, I don't have money for a down payment. We have all the down payment assistance programs. Now, all of them across the country? No, but we have something that covers everyone, no doubt. So assets, we have that solved too. And 3rd is credit. Often the most challenging part of the process. Most people had some mistakes when they were kids. We all have, but we have someone that can help you. And where it is if you're in TikTok or Facebook, or Instagram, all you do is go to our bio, link in the bio, it's stand.store, and in there you'll find credit repair. So someone to help you there too. And here's what I'm going to recommend, guys. If you already know you have shit credit, just go and log in. Just start the process. Just start the process.
And save the stories. Nobody cares. We just want to fix it. We want to fix the credit.
Just say, hey, my credit sucks. Fix it.
Yeah, that's it. That's it. You don't have to be like, well, you don't understand. Somebody screwed me over. And I was a dumb kid. And I was. We all done it. Everybody's done it. Everybody's done it. Yeah. Then when you realize how important credit is, you make sure it's tuned. You make sure that thing is ready all the time.
So that's the Chris and Lee 1, 2, 3 income, assets, and credit. We can solve it all.
Cool.
Let's go to Benji. What's the best way for some money? best way for some money from your equity, how to access your equity.
Yeah, it's going to be HELOC or second, and then occasionally cash out refi. A cash out refi, if you bought within the last year, you might be better off with a cash out refi. But if your rate has a 4 or a 3 in it, you're probably better off with a HELOC or a second mortgage, because you'll be able to refinance that at some point in the future. So yeah, there's that.
Christy with the great questions. Can you get a down payment assistance for a mobile home?
You take that.
The answer is the way you asked it, no. But here's the real answer. It's going to be yes, and here's why. Because if you're financing real estate on a manufactured home, it is not mobile. It is not mobile, which means it's attached to the earth via permanent foundation. So it's not going anywhere. A mobile home has a hitch and wheels, and you can drag that thing anywhere you want in the United States. You can probably take it to Mexico. Who knows? Or Canada.
Okay.
But either way, we can finance manufactured as long as it meets a couple of tests. One, built after 1976.
What month?
June.
Okay.
2, as long as it's
test.
on a permanent foundation
Yep.
with a recorded 433 and such.
And
Okay.
an engineering cert.
Okay, so engineering cert, he's right. An engineer has to look under and go, yep, it's done right.
Yep.
So anyway, Christy, there's your answer. Please call us, text us. We'll get you started. LR will... Man, this thing jumped on us.
I don't know, man. We got a lot of questions.
Will
We
I be
appreciate you
able-
guys. Facebook, Instagram, TikTok, and YouTube. Trying to help you get a house in 2024.
LR, will I be able to get a loan if my husband owns arrears?
Owes arrears. So I'm gonna fill in some blanks for you, LR. Let's say your husband is in arrears on IRS debt, and let's say it's $30,000 a month, and you're legally married. You might have a problem, maybe, depending on if you're in a community property state. But if you do have a problem, here is the solution. We don't just come with problems, we come with solutions. The solution is you contact the IRS. You say, hey, I know I owe you $30,000 a month. I'd like to pay you $300 a month for the next 7 years and pay that bad boy off. The IRS will say, well, gee, we were hoping you'd come in and solve this. Okay, we'll take it. They'll sign it. Your husband signs it. 3 payments. We're good to go. Get you a house.
Got a lot of questions, guys, so just hang tight. We're going to get to you. Every question gets answered until we leave, okay? So, Novi, why can't you do LOC on investment property? What is LOC?
I don't know. LOC.
Loan
Novi
on contingency?
Loan, LOV on investment property. LOC.
Define
we don't know
that.
what. Yeah, we have to figure out what LOC is. We're smart, but
You got it,
Oh,
Jake.
dude, Dak Prescott. You're right. You know who? He got to watch the Super Bowl from home. Yeah, he took the hat off, dude. He took the hat
I'm
off.
Dak Prescott. Hey, I play for the worst team in America. I need a side gig. This is my side hustle.
Oh shit!
Jason, don't put your
Jason.
phone number because I won't call you.
We're not
Text
gonna call
us.
you. Yeah, text us.
us.
Reach
Right
out
there.
to us, man. Yeah, we appreciate you though, Jason. We hope you kill it in real estate. I mean, kill it. By the way, if you hang till third quarter of 24, we believe you're gonna make a fortune. You could do okay now, but in third quarter, all the loan officers that are in business and still have their book, and all the realtors that have been doing the right stuff are going to make a fortune.
Navy Mom has a question.
Go.
She said, why am I seeing refi rates T 4.49 line of credit?
T.
I don't know what T is either.
I don't know what T is either. You didn't put me on, dude. You didn't D&D me. What
You're
the heck?
grown ass man.
Dude. You didn't D&D. Hold on.
Grown ass man.
Calls on these phones. We can't answer these calls right now while we are live. That happens. Sometimes people try and talk to us live, and the phone calls come in. We can't do it. Well, Navy Mom, there's a situation going on where they do what's called a 2-1 buy down, and we believe it's a horrible situation to be involved in. A 2-1 buy down, or
At. It wasn't just
at 4.9. Yeah, 4.49. So let's just say I did a 2-1 buy down for you right now today, a 3-2-1 buy down, and I said, hey, your rate today is 7%, but what I'm going to do is I'm going to make it 3% less. So that's 4%. What? How do you do that? And then the next year it's going to go to 5, then 6, then 7. And that's called a 3-2-1 buy down, okay? So you look like you have a 4%, but I have to qualify you on a 7%. But here's the problem. You got to pay for that up front. And you usually, let's just say you pay $10,000 for it. And here's the one thing that's absolutely guaranteed with the 3-2-1 buy down. Your rate is going up. You're in a contract that says your rate is going up. And you paid for the right for that rate to go up. But that's not how it got sold to you. It got sold to you as, hey, we'll make the payment easier for the next year.
Hey, man,
we'll
why'd
make
you
it
get an
4%. Yeah, we'll make it 4%. Dude, you making fun of me?
Hey, Lee.
Why? Because I'm brown?
Yep.
Anyway, moving along. So that we're not fans of the 3-2-1 buy down because we believe anybody who's buying right now is going to refinance in the next 12 to 18 months anyway. Anyway, cool.
Okay, so Novi, Navy Mom actually helped us out.
Okay.
She said it stands for line of credit. Why can't you do a line of credit on an investment property?
Oh,
Duh.
line of credit on investment property.
Duh.
Oh, okay.
Duh.
So,
Risk.
yeah, it's risk. All loans are based off of risk. So here's how the banks look at it. They say, hey, listen, you're about to move your family into this house. That's your primary residence. So now you, your wife, and your 2 kids all live in this house, and they go to school and everything, and now you hit hard times. The odds on you walking away from that, they're pretty bad because things have to get really, really, really bad for you to walk away, take your whole family, take your kids out of school. That has a lot. So the risk in that is less that you walk away. Now, if you go to a second home, you're like, hey, I'm a baller, and I bought another home in, let's just say, Texas. And I only visited once every 3 months. Now things get hard. Am I going to walk away from my primary or my second? Probably my second before my primary. So the risk is higher to the bank. Well, let's say I have a primary, a second, and an investment property. Which one am I probably going to walk away from first? The investment property.
Yep.
So it's higher risk. The higher risk comes worse interest rates, more difficult underwriting, bigger down payments. If you want investment property, 20%. If you want a second home, 10%. If you want a primary residence, 3.5%.
Don't forget, guys, if you don't want to talk to us, you want to start your application, just text us here, or you can go straight to the link up top, click stand.store, click on apply now, start the process of getting your new home, okay?
Cool.
Thank you for that, Jason. We'll get them. We'll reach out. Let's stay in touch.
Yeah, we appreciate you, Jason, man. We want to help you. We want to help you make a killing in 2024.
Okay, Becca Stern, if your credit is frozen, how many days before applying should I unfreeze it?
Call your loan officer, and then the minute you finish the phone call, say, I'm going to call him right now and unfreeze it for 24 hours. Mr. Loan Officer, I will call you back when all 3 have unfrozen. Pull my credit, then they're going to refreeze it. You probably have it frozen for a reason. That means that you had identity theft, or you have reason to suspect that something could go wrong. So there is only one time that loan officer have to pull it, and then it's good for 120 days, but we have to refresh at 90. So because we can't close an escrow that fast. So after they pull it, you should do it after you talk to your loan officer. Unfreeze it for about 24 hours. Make sure they get a full credit report. Then freeze it back up so you have no worries.
Okay. I work for NAF in Minnesota. Great job. I love it, guys.
Is that your Minnesota accent?
Oh,
How did
it's
he do in a
Minnesota.
Minnesota
Oh, it's
accent?
very Minnesota.
User
You gotta understand, in Minnesota,
6750.
we do things different. It's not
Do
the
you?
same.
A boot.
Dude,
We suck
boot
at
what?
this. We
A boot
suck.
what?
We suck. We suck. Hey, user 6750, then you got the corporate wide email that said we can now do loans in New York. What? We used to do these lives for so long. Dude, we got lasers.
Oh,
Dude,
maybe
we
it's
got
'cause I did
lasers.
that.
We got cat lasers.
Is it 'cause I
So,
did that?
cat eye lasers. I don't know.
Do it
But
again,
anyway,
whoever did it.
we used to keep saying, what states do you do business in? We're like, hey, we love New York. I love New York. Been to New York. Love New York. Love New York. Can't do business there.
You're mean to me,
But
New
about
York.
10 days ago, we all got a corporate email that said New American Funding is now licensed to do business in New York. I'm very excited about that because I'm the only bank that I know of that can do business in all 50 states.
bang.
All 50 states. Everybody else has to say everywhere but New York.
Bang, bang. Bang, bang, bang.
Cool.
Bang, bang.
Benji, I've had a home for 7 years and 4.2 rate. Congratulations, Benji. That's a great rate. Great rate. Great rate.
Can I have
Thank you.
multiple loan officers checking if I qualify for a mortgage?
Not a good idea, Christine. Not a great idea from a bunch of angles. 1, loyalty. 2, if I know that I'm working against another loan officer head to head for one thing, I'm cool with that. I'm good with that. But if you're going to say, hey, I'm going to start with you and I'm also going to start with this other guy. I'm going to say, hey, you know what? I'm going to help you out here. Just go with the other guy. Yeah, just go. I don't want to do it. I don't want to do it.
So-
because this is how it goes. Well, he said he can get better. Oh, his LE is better. I don't want to do it. I don't want to do it. And any loan officer who would probably is struggling so much for business, so much that I don't know if you want to be with them. So here's what I recommend. I don't have a problem shopping rates. In fact, I tell people, shop me all day long. And if you can beat me, get me a locked LE because I'm giving you the best I possibly can. But I don't own the company. So if you give me a locked LE, let's just say, hey, I quoted you today at 6.5 and Wells Fargo came in at 6.375 and you gave me a locked LE, I would go to my management, the owners of the company, my managers, CPMs, and I would say, hey, listen, we're about to lose a loan to Wells Fargo. We not only need to match this, we need to beat it. And it's out of my hands because the bank has to make the choice to lose some money in order to beat Wells Fargo. But it happens all the time. It happens if we get that locked LE, and it has to be a locked LE, locked. And once it's locked, I go and they go, okay, cool. Here's what we're gonna do. We're gonna do this, and that. And then we scramble behind the scenes, and I go, hey, great news. My management wants to really beat Wells Fargo today, and because of that, you're getting a better rate than even you showed me, and you land up with a better situation. So in that situation, I don't mind fighting for you. I love fighting for you. But if I know from the jump you're gonna have another loan officer and another loan officer, and we're all gonna be fighting amongst ourselves, I'm just gonna tell you, good luck to you. I hope they do well for you. I'm not mad at you, not mad at all, not even a little bit. I hope you kill it. And then usually what happens is, right before you close escrow, hey Lee, this loan officer said he could do this and all of a sudden he can't. Can you save it?
Well, now you want me to save you.
And then I go, I don't know what kind of mess we're in right now. So I can't commit to saving it because I didn't start it. But I can take a look at it. So after I'm working on my priority files that have been loyal to me through the whole process, I'll see if I have time to work in and save your file.
So here's what it is. This is not based on a true story. But when I was a young man, I was dating this girl, and she said, I'm dating 5 other guys to see who's the best. And I said, you already found him. It's one of those 4.
Yes, not this one. It's out. Pace out.
But that being said, when we're doing your loan, we will, whether we're in competition or not, we will absolutely get you the lowest available rate at that time. We'll actually watch it. So we get lock alerts. We get a lot of detail and information that says when to float and when to lock. So you're going to get the best deal regardless.
Where are we all based? Lindy E says, we're in Riverside, California, but we do loans in all 50 states. My primary residence is in Texas. And I actually spend a lot of time in Texas, a lot of time in California. We are based out of California, do a lot of loans in Texas, but we can do in all 50 states.
Hero and Pearl, what is this show all about?
This show is how to breed French poodles.
That's his show.
No, wait a minute. No. How to get a loan, how to get a home in 2024. Learning about purchasing a home, purchasing your primary residence, purchasing your second home, or your investment property. What are the guidelines? We are 2 licensed loan officers. My name is Lee Duran, 944-254, my NMLS number. This is Chris Dominguez. I don't know your NMLS.
1066958.
Okay, good. So we help you get a house.
All right.
Hope that answers you. Cool.
How do you take your PMI from your mortgage? Take it off.
You do it.
All right. 2 ways. The freeway, get it?
The freeway, you made it funny.
Is you're going to call your bank, and they're going to want you to have paid down your loan, so your original loan balance, they want you to pay it down at least 20%, okay? So if you pay that down at least 20%, they'll remove it. If you pay it down 22%, it'll automatically fall off. If you're not there, if you're only down 10%, but your value is skyrocketed because you bought in 2020 or 2021, then you would call someone like Lee or myself. And we will refinance it, removing the PMI, hopefully getting you a better rate, to get you a better payment overall. So that's 2 ways. Call your current bank if you've paid it down far enough, or call Chris and Lee. We'll take care of the rest.
Hero and Pearl. Do you guys deal with subject 2? Thinking about this way. Any thoughts on this? Yes, I do, and you're not going to like them. You're not going to like them at all. So, have you ever seen these, I'll call them quacks, that do like lip injections in their house, and they don't have a medical degree, but they're doing lip injections because they can get the stuff, and they just do eyebrow injections and lip injections, and then all of a sudden someone on the news has an allergic reaction and they do not know how to handle it and they cannot deal with it. So
pause for a second.
Okay, cool.
Pause for a second.
Okay, got it. Yeah, we have to pause for a second. Okay, cool. So the reason that this was bad, the whole bad situation, is because this guy decided to skip the medical degree and just go to practicing injecting fluids into somebody's body. Scary stuff. Okay, cool. So what's subject 2? For any of those of you listening who don't know this, subject 2 is this. You go, hey, there's this grandma over there who does not know her house is worth $400,000. She doesn't know it. And she says to somebody, well, I'd be happy with $300,000. And somebody sees an arbitrage, something between the market and what the person's willing to take. So they go, well, grandma, I'll get you $300,000. I just need a subject to note, which means I'm willing to sell it for $300,000. I'll put it on the market for $400,000, and I'll take advantage of that arbitrage, which sounds kind of good. Now, here's the problem. You enter into escrow. We start doing all kinds of escrow type stuff, and then something goes wrong, and you took title, and you say, you know what? I can't do this anymore. I'm just going to quit this. Now, who owns the property? Does grandma own the property? Oh, wait, what? Well, when you transfer it over to your name, if you did it that way, because there's many ways to do subject to, but if you transfer it over to your name, all of a sudden grandma gets a notice from her bank saying, hey, looks like you transferred the title. We are triggering our due on sale clause. You owe all $300,000 right now. And you go, wait a minute, the bank can't do that. Yes, they can, but you never went to medical school, so you don't know it. You didn't use a realtor, you didn't use title, you didn't use escrow, you didn't use all of that stuff. Now, I get it. There's a lot of these people saying, hey, you can buy these Section 8 properties. That's the big one right now. You can buy Section 8 properties for subject to. But the reality is, realtors have a license because they have to actually study this stuff. And it's not even the realtor that knows a lot. It's their broker. Because their broker has to have errors and omissions insurance to make sure they don't mess up. Why? Because you, as the lowly real estate investor who comes up with the subject to, you don't have errors and omissions. You can just walk away. And when you did that, you hurt the buyer, you hurt grandma, you hurt the bank, you created a legal situation, all because you skipped going to medical school and you just started injecting bad things into people. Is that a little rough?
Yes.
It's a little rough, right? Yeah. Anyway, moving on. Cool.
Jason, same thing on real estate. It's all about relationships and the value we bring.
Absolutely, Jason. You can play it two ways. Two ways. In real estate, if you play long game, there's a great career. In mortgage, if you play long game, it's a great career. You make a lot of money. You can play short game in either one of those. Short game in lending is, I'm going to go take 300 basis points from a broker, which is high commission, very high commission, and I'm going to make a fortune this year. But then no client will ever deal with you again, because in order to get that high commission, you had to hurt them in rates. So if you're playing long game, you understand there's a balance between I need to make a living and I need to keep my clients in a competitive market so they will keep coming back, and I have to give them great customer service all the way through. You got that?
No, we're good, man.
So no, if I can.
What did you?
Yeah,
ran
you
out
go
of
there.
steam? Okay. Jason. Haley, what's the best interest rate locked in recently on a conventional loan with 800 plus credit score on non-jumbo? Okay.
I think we locked a 6.25, right? We locked a 6.25. It was a buy down, but it was a locked. I think we locked a 6.25.
I don't know about that. I know it's 6.5.
Okay, 6.5. Sure. Go with 6.5. 6.5. Yeah, ish. Yeah, but that was so 10 days ago. The Fed came out and CPI came in too high. It was expected at 2.9%, came in at 3.2%, and the Fed came out and said, well, we don't know if we're going to be able to hit our anticipated goal by March. And immediately the uncertainty crept into the market, and the spread from the 10-year yield jumped. And the way it showed is interest rates went up 50 basis points all the way up to 100 basis points in some case. So interest rates went up. Now, it's an artificial go up. It's not really based off of the 10-year yield, because as soon as the Fed steps back in and says, we are confident that we're back on track, immediately you're going to see that drop. But they still haven't dropped the rates. They said we may not even drop until June. We still think third quarter, and anywhere from 3 to 6 drops, depending on who you listen to. Cool.
Jason said he just got a listing on a shared well, 5 people. He knows that FHA can do 4. Can VA or USDA qualify with the 5? I don't know the answer to that. I can get it for you, though. I know you text us, so I'll definitely get you an answer today. So we'll look into that. Do you know?
Well, the shared well, shared listing on shared well. So that well tells me that it's units. And if it's units, because there's water rights, which is one thing, and then there's units. FHA, all of them can only go up to 4 unit. VA can go 4 unit. FHA can go 4 unit. Fannie Mae, Freddie Mac, 4 unit. All those can only go up to 4 unit. Once you get to 5 unit, you're in the commercial world. But I think you're talking about a well and water rights, which is a different scenario. So we'd have to dig into it a little bit deeper.
Sheesh, prices aren't dropping fast enough, said Haley.
I know.
And they're not going to. I mean, you have your pocket communities that are going to do those things. But for the most part, we're going to be doing this once the rates start coming down. Creation clause. How does a streamline work to lower the house payment, and who can I ask?
Okay.
I think you just did.
Yeah, creation clause. It's real simple. Streamline is a real thin FHA refinance. And it basically says, hey, listen, you've been making the mortgage payment fine for the last 2 years at $2,500 a month. With the lower interest rate, you're going to be making $2,300 a month. So all I have to do is make sure that you haven't been late on your mortgage payments, and we're going to do this really easily because you're in a better situation. The problem is people think they can streamline, and they have a 4% right now, and they can streamline today. But today's market rates are probably going to be, unless you have great credit, 7%. 7%. So 4% will not streamline to a 7 because it has to be a better interest rate than you already have. So streamlines for most people in this environment can't do it.
Yeah. Creation clause, it's your loan officer. So we're loan officers. We handle the finance, the money side. The realtor, the agent, handles the real estate side. So if you've already closed on your transaction, your real estate agent's done. It'd be your loan officer or us, because we're loan officers that will help you throughout the process. And I think what's that?
OKAU. I don't know what that means.
Is that where you're located? Is that Hawaii? No. It sounds like it's in Hawaii.
Yeah, it sounds like Hawaii. Yeah, Hawaii's good. Yeah, we do business in Hawaii.
Yeah.
Yeah, cool.
So let me share something with you guys. The challenges of buying a house. The biggest challenge that people run into is credit. It's always credit. No, I said thank you, LOL.
Okay.
Does that mean thank you?
Yeah.
Okay. Is credit. Credit's always the challenge. It's not income because most people have jobs and had it for 2 years. It's not always assets because we have programs that will help you with that. She's in Palmdale.
Palmdale.
All right, nice. California. We're in Riverside.
We're in Riverside. We're not far from you.
So credit, okay? If you have junk credit, if you know you have bad credit, if you haven't made payments on time years ago, you probably need to just go to the link up top, click on credit repair. They're helping a lot of people. This is the biggest stopping point. The reason why I'm pushing this so hard right now, guys, is because we're about to have a wave of buyers coming in, and a lot of you aren't going to have a chance. And if you have bad credit during this time, you're absolutely not going to have a chance. So if you fix it now, get in line, get it repaired. Maybe by summer, you'll have a chance. So go to the link up top, join credit repair, get your credit fixed, and let's get you into a home.
We are here to help you in 2024 get a house. And you were asking about the difference between the realtor and the loan officer. Those are two different verticals in the buying process. The loan officer deals with the financing side of it. They make sure that you're qualified. The loan officer, that's what we are. We're loan officers. We pull your credit. We will calculate your income. We will assess your assets. And we will tell you how much you're qualified for. And then that's it. We don't look at houses. We don't care about the house. I don't care where you buy a house. I don't care what kind of house you buy. Then you need a very qualified realtor. And that's one of the most important decisions you'll make. Don't choose the realtor because they're your cousin or because they're your uncle or because you knew them one time in high school. Choose the realtor because they have a lot of transactions behind them, or they have a mentor that has a lot of transactions behind them. Because you will find out the hard way if you don't have a good realtor. You'll end up going, hey, my foundation fell apart. I don't know what to do. The realtor's going to be, I don't know what to do either. Let me call my broker. If they call their broker, they don't know what they're talking about because they should have kind of knew what to do. The broker does have to get involved because in most states, California especially, the broker is responsible for everything that the realtor does, and the broker has to maintain the errors and omissions insurance. So they're the ones that understand where the lines are drawn. You also have title company for things. You have inspection companies. You have appraisal companies. There's a bunch of people involved in order to help you get that house. Go ahead.
Navy mom. In rural communities, sharing a well is not uncommon.
Yeah, you're right.
So Jason Thomas, is this a rural community? Is this units? Like what's going on with that? I want to know a little bit more about that property. Jerry Otero, trying to buy a vacation home. What are the best interest rates on non-primary mortgages?
So if you're going for a second home, it is really going to depend on your FICO score. Because when you say, hey, listen, Mr. Bank, I'm a baller. I'd really like to buy a second home. The first thing they're going to say is, what's your FICO score? Because buying a second home is different than buying a primary. It's different because you have said, not only can I handle a primary, I can handle a second home too. And they say, cool, what's your credit score? 622. No, you can't. Bye. You're gone. All right, how about if I have a 660? Nope. Bye. You're gone. You're gone. 660, no second home.
660, no second home?
680 is where you start. 680 for a second home. More likely 700. So you have to have a good FICO score to start with. And then the second thing is the mortgage rates on a second home are going to be better than investment property, but worse than primary. So whatever you would qualify, perfect score, perfect scenario, tick that up a little bit. That's what you're going to be on a second home.
Jerry said that it's Credit Karma's 805. What now?
Credit Karma. Well, we don't like Credit Karma.
Now? I don't dislike them. They're just not accurate.
Yeah, it's just not accurate. Why is it not accurate?
Because you're using a different formula to find the credit score. Credit Karma, I think, uses 9, and mortgages use 5. So they're trying to sell you credit cards. So Credit Karma is going to give you a score based on what credit card companies can see. So when we pull your credit, it's going to be different. Could be up, could be down. But at an 805 with credit cards, you're probably high 7s with mortgage. So you're in a good spot.
Sometimes better.
Time for a commercial.
If you need a badass loan, call Badass Loan Officer. You can reach your badass loan officers, Chris and Lee, by texting these phone numbers or calling. But don't do it while we're live because we're not going to answer. Why? Because we're live. This will disappear in 5, 4, 3, 2, 1. Disappeared.
Okay, cool. All right, so Jason said it's rural. Jason, is this units or is this 5 people sharing one well? 5 different single-family residences.
And if that's the case, we'd have to see the contract, but I don't think it's going to be a problem. I don't think it's going to be a problem. I know that. Well, because there's like in the Chupadero one, there's like 40 people on that one well system.
Really?
But they have rights. They have a property right, well right for each one.
So they don't have their own well; they're sharing a well.
Correct. They're all sharing a well.
Oh, I didn't know that. Okay.
Yeah,
So
and they all have a right. Yeah, they have a right to that, but you can't add another property. There's a limitation on building because you can only allow so much water.
5 manufactured homes shared well.
Okay. Yeah. We'll have to we'll look into it, Jason. No question. We'll look into it. We'll see if we can do it. So we are on Facebook, Instagram, TikTok, and YouTube. What questions do you guys have? Where are you at in the country?
You got it, Jason. We're here for you, man. And I know you text me, so we're going to save your contact. We'll get you an answer on this. And for you other agents that are out there, if you... Oh, man, shut it down.
No, it didn't.
Okay, good. So for you other agents that are out there, if you are anywhere in the nation, text us your name, number, city, and area that you serve, because we get clients across the nation that need help, man. They need your guys' help, so let us know. The Chris and Lee 123. Let me share with you again. I'm really excited about this because
tell me.
Everyone has a problem, and when it comes to buying a house, there's only 3 things that could have a problem: income, assets, or credit.
Say that again.
When it comes to buying a house, there's only 3 things that there could be a problem: income, assets, or credit. Okay. Okay. So if you have an income problem, we have a solution for you. If you have a asset problem, we have a solution for you.
We have a solution.
If we have a credit problem,
solution.
Solutions all the way around.
Dude, we have a solution. You get a solution. You get a solution. You get a solution. Everybody gets a solution.
So if you're watching this feed, there's no reason for you not to be able to buy a house because we can help you with any one of those problems. Now, might it take a couple years? Sure.
Sometimes.
Sure. Yeah, but if you're 38 years old, who cares if you buy a house at 40? If you're 18 years old, who cares if you buy it at 20? Yeah. We'll get you a home. So Chris and Lee 123. If you need that program, just text us. Text us Chris and Lee 123 right there. Phone number's right there. So what else you got, man? What's going on in the economy?
Well, the CPI is going to come in one more time before the March meeting, but the odds are very low of an interest rate reduction at the March meeting. So we don't think it's going to happen then. People are speculating on the May, but I don't think the May is going to happen either. No? I think it's going to be June. Okay. So I think the June is going to happen, but I think it's only going to be 25 basis points. And then I think August. Oh, I'm excited for August.
So back
I'm like
to school.
Crazy excited for August for 2 reasons. One, there's going to be all kinds of crazy pandemonium because of the election. We're getting close to the election at August, September, October, November. Obviously, November's voting time. But that's when it gets crazy, crazy, crazy. And the markets go crazy and respond to all kinds of stuff. So I think all of that's going to happen third quarter, like we've been saying for about a year now. And when that happens, all the loan officers are still in business. By the way, a lot of them have left. I heard 80,000 loan officers left the business. You heard more, right? Mm-hmm. What would you hear?
700,000.
700,000 loan officers left? I don't know what your source is. I have 80. My source is pretty solid, but that was old. 700,000. I know a lot of loan officers that were ballers, making $700,000 a year. They're selling solar. Right now, door to door, knocking on the solar. They're going, hey, y'all want solar panels on your house? You can save $200 a month on your electric bill. Yeah, these guys, it's a rough business. There's a lot of realtors out there that their favorite line is, do you want a Vente or a Grande?
I'll take Ariana Grande.
Ariana Grande?
Yes.
All right. So it's a tough business, but if you make it to third quarter, I think we're all going to make it. There's a lot of money in this for everybody involved. Just do the right stuff.
Okay, so back to the economics and things. So if we don't get started until, or things don't start picking up and rates start up until August, I think summer's going to be busy as is.
Yeah, it is. It's always busy. It's always busy.
But this economy, I won't call it this economy, with the interest rate environment, even though we're still high, the beginning of this year, all of January, a flood of people entered.
Yeah.
So they're not going to start shopping till probably March, April.
Well, there's something you have to factor in, and that is unemployment is going up. It's not showing that it's going up fast enough, but there's a lot of people getting unemployed. And for those people that thought they were going to buy and they got handed a pink slip, they can't buy anymore. This is why the Fed has to dramatically correct this once they get back on course. Because the Fed knows as long as it keeps these rates up this high, unemployment's going to keep going up, and eventually it breaks the economy. Now, I do believe Chairman Powell's a pretty smart guy. I think he's a pretty smart guy. I don't think he's listening to some guy going, hey, the sky's falling, you messed up, or hey, you're the greatest guy in the whole world. I don't think he listens to any of those guys. You can't when you're at that level. I think he really has a good beat on what's going on, and I think once he gets in that scope, he's going to have to correct it so that jobs come back in, and when jobs come back in and interest rates are down, that's going to create the screaming economy, man. That's what's going to happen. And if you listen to the gurus, the ones we pay to tell us this stuff, they say it's going to happen. They're saying it a little bit earlier than I think. I think third quarter, they're thinking second quarter. But
my guru told me?
What did she say? Beginning
of 2022.
Yeah, that's right. It didn't work, huh? It didn't work. 2
years later, you never rethink that plan, man.
Cool. So I think we're about done with this session. We appreciate you guys. We've been Chris and Lee. We will be back.